Hey, my name is Rick Sadler. I am the founder of Hit and Run Candlesticks. I want to thank everyone for being here. I do appreciate your time. What I'd like to do today is I'm going to talk about 6 steps that I tend to look for when looking for double-digit gains. And we're going to talk a little bit about problems and solutions and whatnot. But before we get started, there's something I want to share with you. Please grab your pencil and please grab a piece of paper. I'm not going to try to sell anything to you. This is not what this is for. This is to try to actually teach and help in 45 minutes. But to be honest, remember, don't forget the pencil and paper now. To be honest, really, what kind of silver bullet can I give you in 45 minutes? And the truth is, no one can give you any little silver bullet in 45 minutes. You might see a lot of aha moments in the entire investor inspiration webinar, but the truth is, it's going to take a little bit more to really put those dots together and help and to help with that trading. So here's what I want you to write down. hitandruncandlesticks.com. Member e-learning tonight in our trading room, room number 1. I'm going to remove the password. So please, if you come into the member e-learning tonight, I'm going to go over again what I'm doing now, but in much more depth, and I'll be able to answer a great deal more questions. So please write that down. hitandruncandlesticks.com. At the very top, you'll see trading room login. Just click on that. At 8 p.m. Eastern tonight, the password will be removed, and I'd like to invite you all in there to so we can take a look at this, what I'm going to show you here a little more in depth. And maybe then I can connect a few dots for you. Okay, 6 steps to double-digit profits. First, I have to do this legal mumbo-jumbo stuff and basically tell you that stock trading is risky, like nobody here doesn't know that already. Look, trading seriously, it's very risky. You should always take a second look at every trade you put in. And just because there was a great trade 2 weeks ago or yesterday, it doesn't guarantee that there's going to be a great trade today. So protect your money. Always ask a second question to yourself. Do you really want to place this trade? And if you really want a better opinion, check with your broker. I want to show you a chart. Let's jump right into charts, and then we're going to have to look at a few slides with a little text on it. But first, a chart. What a sweet chart. Now, I'm a swing trader. I'm a swing trader that looks for double-digit gains. And this is a terrific chart. GE, look at that. That's, to me, this is a beautiful chart. And what a great bottom it's put in here. What a great bullish kind of a bullish W pattern, not perfect, but kind of. Nice little breakout, nice rally up through the 200-day simple moving average, which is this dark red line. A little bit of consolidation. It popped up a little bit, hit some resistance. It bounced back for a retest, and then we've got a beautiful bullish engulf in there. Let's just go trade this, okay? Let's just get ready. And if I'm not mistaken, this chart was just clipped a couple days ago, so at this moment in time, I am not 100% sure where GE is sitting. If we have time after my presentation here behind the PowerPoint, I've got my live charts up, and we can go look at it. If I don't have time tonight, we will definitely look at this tonight in the trading room. Now, sweet chart, or is it? Let's just leave that right there and let's move on for a minute. We'll get back to this chart, okay? All right. Sometimes there's problems, and I want to go through with some of these problems with you that we may have when selecting charts. And everything I'm going to go through here today is exactly what I look for. I try not to complicate everything. I'm a big believer in just a few little things, and we're going to cover just about everything right here today as quickly as I possibly can. And that's, we want to select good tradable charts. We all want to do that. I think that's something everybody does, don't you? But sometimes it's a problem. And what we want to look for are multiple swing charts now and in the future. I think one problem that traders have is they look for the chart that is going to pay them right now. Yeah, and they're willing to sit overnight, 2 days, 3 days. They're willing to put that trade on. And then they make that trade, they make a little bit of money, and then they move on. And they spend a crazy amount of time flipping through charts or going through scans looking for more trades. When the truth of it is, the trade they just had, the trade they just made money on, just might be good in the future. Just might be good in the future. So what I'm going to show you is how you might trade the same chart over and over, trading those swings. There's a problem knowing why these charts are selected. It's important to know why. And this is where we try to put together a set of rules, and there is no one set of rules that's perfect for every trader. There's no way, because there's one element in a trader's life that we work very hard to get rid of, but you can never get rid of it. You can dim it, you can push it down a little bit, but you cannot 100% take it away, and that's emotions. That is the one thing that separates every trader. We can all look at the same moving averages. We can all look at the same oversold, overbought indicators. We can do exactly the same. But that one little thing right there, emotions, that separates us. And that separates us by miles and miles. I see it all the time. We can be looking at charts. We can buy a chart, and there can be some traders make money on it, and there are some traders that lose money on it. Just because it's a winning chart doesn't guarantee that you, as a trader, are going to make any money. Man, I've learned that the hard way. I still learn that. I mean, you know, I get asked all the time, man, Rick, do you win all your trades? I wish I did. Absolutely not. I have a lot of losing trades. I have a lot more winning trades, but I certainly have losing trades. And it's because your emotions take over. So we try to push those emotions down through having rules and making a plan. A plan is so very important, and it doesn't matter. I mean, you can write your plan down on paper. You can put your plan on a 3M stick-it note and put it to your screen. The one thing I would never do is just put your plan in your brain. Never do that, because your brain will mess with you. Because you know what's in your brain? It's that emotion thing, and that will change your plan without you knowing it. And that is a bad way to go. Another problem, what makes these charts tradable? This is where something I really, really like to talk about. And what makes a chart tradable? It's simple. Having multiple conditions. A condition is not a reason to buy a chart. Multiple conditions create a reason, but the one condition by itself is never a reason to buy the chart. Multiple conditions are, and I love, this is one of my favorite subjects, talking about conditions in a chart. There's always a problem. Every trader asks this, you know, where to consider an entry and a stop loss. Well, what if I told you that if we could find charts with double-digit prospects in it, that the entry's not that important. For instance, if you're looking to make 5% on a swing trade, which I think is ridiculously low, then your entry just might be important. But what if the potential is 25, 30, 40%? All of a sudden the entry is not all that important. Now, important, but not hugely important. And this is one of the things that I'd be more than happy to show you on. And if you're able to come into the trading room tonight, please do so. I'll be more than happy to show you this. Well, what about stop losses? Well, if you're looking for the correct charts, and if you know what to look for, and if you know the conditions, then you're able to drop your stop losses down a little bit. Now, I could talk probably an hour about stop losses, and most traders have gotten into this habit, and it's because of our fast computers. It's because of technology, because we're able to see ticks and we're able to see the chart penny by penny. And what happens is we start fretting about the hard right edge, and we start worrying about what it might be doing, and we just get our stops stopped out either manually because we set our stops too close, or we manually stop ourselves out. Well, I think what we need to stop and do is consider what a stop loss is. Now, first I'd like to share with you what it's not. It's not a way to save 25 bucks. It's not. You know, we're stock traders. If you can't afford $25, then maybe stock trading is not your cup of tea. Stock trading requires a little bit of cash. You don't have to have a lot of cash, but you can't be worried about the 25 bucks. So stop losses, what they are for, they're for protection. They're not to trade with. We've gotten a habit, I've seen over time here, that traders have gotten a habit of actually trading with stop losses. In other words, they buy into a chart without the correct conditions, and they set their stop loss because that's what everything is banked on. All that means is that's a hope trade. I see a chart, I buy the position, I hope it goes up, and in case it doesn't, I'm only going to risk 25 bucks. That trading never got anyone anywhere. And then what happens is that person goes off, they're either broke, they're bruised up really hard, and all of a sudden they think that all trading is rigged. They think trading is not made for the retail trader, and that's not true at all. Trading is, man, I think trading is just superb for the retail trader. Swing trading was the best thing that ever came around for the retail trader. The problem is no one wants to do the work. Well, the work is not that much, and that's something I'd like to teach you tonight. There's always a problem or where to put targets. Well, let's think about targets for a second. Targets are simply a space on a chart. That's all. That's all. There's nothing that says this chart has to go to that space. No law, no rule says that. So instead of using the word targets, what if we replace that word with direction? This is where I think the chart may go in a direction. The chart, you might buy it here. I think this chart is headed in this direction. Now, the sweet part of that is, what if the distance between here and here was 20, 30, 40, maybe 50% away? Now, don't get me wrong here, okay? I'm not saying you're going to collect all that money. If that's 40% from here to here, I'm not saying you're going to collect 40%. In fact, I seriously doubt you will. Very few people could do that. Handful of people in the world can only do that on any kind of consistent basis. But what if you had that 40% little playground right here? What if you could peel off 15% at a couple different places maybe, or 20%, or maybe the trade is I'm gonna change the color here. You know, maybe the trade's a 15% trade. Pull back, let it swing, and you get another 15% out of it. What if you could do that? That's what we teach. Oops, let's see here. There we go. So some solutions, trading 101 with hit and run candlesticks and right way options and trader vision. This is all things that we have at hit and run candlesticks. A solution, understand a tradable trend. Understand price action. We're going to look at price action through candlesticks. So you have to know what candlesticks are all about. And if you've run out somewhere, and if you've bought a $20 book on candlesticks, and you learn that that was a bullish engulf right here, and on the 2 pages, you know, it was talked about where that's a buy and you should buy it and you should make money. If you find yourself rarely make money, or for every dollar you make you're losing $1.05, or maybe for every dollar you make you're losing 95 cents, that's probably because that's where your education stopped. Bullish engulf is a good candlestick signal, but it is not necessarily a buy signal, and it is not necessarily a reversal signal. These are things that I would like to teach you. How to read price action through candlesticks. Chart patterns. I'm going to back up to candlesticks. Candlesticks, when it comes to price action, is, I think, the greatest thing since sliced bread. It is a beautiful tool. I love it. If somebody ever took candlesticks away from me, I just might have to go out and get a job somewhere, because I don't know if I could trade without them. They're that important. So it's very important to learn those. Let's switch gears just a tad. If you want double-digit profits, you need to learn about chart patterns. Something, I'll let you in a little secret right now. And if you're not able to make it to our webinar tonight, that's okay. We will record it, but just do this one thing on your own. Okay? You go find a chart that you look at, and the trend has just been, let me make this a different color. The trend has just been up like that. And you're wondering, man, how could I have gotten into this chart down here to make that kind of a run? Well, first of all, we're swing traders, so this might represent 4 months, and you're not going to be in it for 4 months. But what you might do is you might make half a dozen swings or a dozen swings in it. This may be up from the 0 point to the top point 105%. Well, you may make 5, 15, 20% trades along the way. So the way to find these double-digit gains is to look for chart patterns. So now when you're in here and you see a chart that moves up and it pulls back, you need to know what a flag looks like. You need to know what a pennant looks like, a J-hook looks like, which, by the way, all these are clever little names, and we use them all. They're clever little names for one chart pattern everybody needs to know. And a pennant, a flag, consolidation, a 1, 2, 3 setup, an ABC setup, they're all the same thing. They're continuation patterns. That's what you need to know. And you need to understand and know those chart patterns. This is what we teach. So when you find a pattern like this, and you find that then you do that breakout, the breakout of the top, wherever that top may be. When that thing starts to break out, I'm going to change the color here. When this breaks out, this is what creates the next long run. And then it goes up so far, it runs out of money, runs out of steam, runs out of energy. And what happens? Now it does a little pullback. And that's how you start these little patterns like this. You start these wedges in here, because now you take this leg here. I probably made that pullback a little too far. You have this leg in here. It pulls back till it finds support, and then it gets bullish again, and it continues. These are continuation patterns. You just need to learn what those are. Support and resistance. You're not using support and resistance. You need to. If you don't know how, please come over. We'll teach you. I think this is a huge solution in trading. Indicators. You're going to find that I'm not a big user of indicators, and I'm not going to beat them up here today at all. The only thing I would suggest is if you use an indicator, know what the indicator is about. I have polled many traders, and they tell me what kind of indicators they use, and then I say, explain that indicator to me. You could hear a pin drop. Well, oh, it shows it's in a bullish direction. No. No. That's the chicken way out. Explain what the indicator is telling you. Explain to me what it means. Research the individual or group of individuals that created the indicator. Know this indicator inside out. So, like I said, I don't use indicators. I'm not going to beat them up. But if you're going to use indicators, I think it's best you know everything about them. And that is a big solution. All right, let's talk about a tradable trend. A solution to trading is, or a problem to trading is, people do not trade within the trend. They try to pick bottoms. There are always a few people out there that claim they making money picking bottoms, but I've been doing this for over 20 years now, and the bottom pickers that I know of, they have either switched to where they don't pick the bottom, or those people are no longer around. The folks that have been around 20 plus years, they know that bottom picking is not an answer. I know that our moms and our dads and our grandparents, they always said buy low, sell high. I know that, but this is not what they meant. What they meant was this right here. What they meant was a chart in a trend, buy low, sell high. Buy low, sell high. That's what they meant right there. They didn't mean do some bottom picking. Yeah, that's not what they said to do. So understanding what a trend is, understanding how a trend is built, understanding what makes a trend, which that would surprise most people when you really learn what a trend is, or what. Here's a chart. It's not trending in a bullish way, and all we're talking about is bullishness right now. It's not trending in a bullish way, but what constitutes a bullish trend? Is it higher lows and higher highs? That certainly is one answer. Is it a tagging, a line drawn from a low to a higher low up like that? Is that a trend? These are things that we might be able to answer. Candlesticks. This is probably one of the most misused indicators in the entire trading world right here. Candlesticks. We go out there and we open up that book that we paid 20 bucks for, and we learn what a belt hold is. We learn what a bullish engulf is. We learn what a bull kicker is. We learn what a morning star signal is. And in the pages that described each one of those, it showed us charts and explanations how if you would have bought the belt hold here and it broke out here, you would have made umpteen%. You would have gotten rich off of it. Well, that's the problem. We don't continue to read the pages in that book, and we don't continue to buy more books. By the way, I have no candlestick bull to sell, so I'm not selling you anything about candlesticks. What I am offering to do is to help teach you how to properly read candlesticks and what they are telling you, rather than what I call the easy way out. And candlesticks, they really are cool because They tell you what everyone is thinking. I mean, they are an easy way out for chart reading. They really are. They give you a lot of information, but now you have to interpret all that information. And if you don't have the tools to interpret that information, these are just square blocks on a chart is all they are. So understanding what candlestick signals are truly telling you, and there's not a lot, there really isn't. There's just a handful of candlesticks you need to know, and once you know those, then you need to know what they're telling you on chart placement. Where are they on the chart? Now that is not hard. Just learn the candlesticks first. And when I say learn the candlesticks, if somebody's out there and you say, well, I know what a bullish engulf is, that's not quite what I mean. That was learned on the free webinar or the $20 book. What I'm talking about is let's learn what that truly means. Where is that bullish? Is it a bullish buy above this high? Is it? Might depend on where it is on the chart. It might depend where support and resistance is. It might depend in chart patterns. In fact, here's another little tidbit. If you can't make it tonight, this might be something you can take with you. Say we have a chart pattern. Here's a pole, and let's just put up a little pennant, flag, continuation pattern in there. All right. And now let's put some candlestick signals in there like this, and let's drop them down like this, and let's pick them up like this. Do you know that inside this area here, these candlestick signals mean very little? In fact, I might almost step out on a limb and say they mean nothing, nothing at all, because they're contained within a pattern. When they're contained in a pattern, they mean very little. They break out or break down. Now that might lead to something. This is what I would like to show you. Chart patterns. I talked about chart patterns. If you want double-digit gains, this is where you go. This is it right here. This is the trick. It takes all that other stuff kind of put together, but I truly, truly, in my heart, believe this is a huge key. Most people already have the basics down. For instance, already people in your mind, you're saying cup and handle, ascending triangle. You're naming them. Okay, now tell me exactly what a cup and handle is. What does it truly mean? What does an ascending triangle mean? What does that mean? What if you get a bearish candlestick here? You know, what if it opens up high and pulls back? What does that mean? If anything at all. Okay, if anything at all. Support and resistance. Everybody should have support and resistance on their chart. And if you don't have support and resistance, you need to get it. And I'm going to show you how to do it. Every chart package has a special little indicator out there for support and resistance. Did you guys know that? And I cannot see if there's any answers or anyone's holding their hand up. I don't know. But do you know that every single charting package out there, every single one, has support and resistance on it? I'm going to show you how to do it. You simply go to your chart package, you pick out your line, and you simply draw a line. There it is. Every chart package has it. It's probably one of the most important indicators that is not used. Many, many traders do not use this little indicator right there, that tool to draw that support and resistance line. Because what will happen is they just look at the chart and they say, yep, I see it. Nope. Draw the line. Believe me, there will be things that will jump out on you on the chart that you never dreamed were there. And also, it will make your eyes go to those special spots where you may see support or you may see resistance. There's also a lot of interesting ways to draw support and resistance. This is something else I'd very much like to show you tonight, is that do you put the lines at the very top of the wicks? Is that where you put the lines? I'm going to say no, you don't. But then again, we're not micromanaging the hard right edge either. If you're micromanaging the hard right edge, you're probably a top line drawer. And this might be why you're not getting some of those double digits in the old profit box. So what I'd like to share with you is more about where to draw those support and resistance lines, and why you shouldn't use the tippy tops, and how you can use a little bit lower to get a more accurate reading. Because something you have to think about is, what are we doing? We're trading, here we go. We're trading swings. In all swings, there's these little pullbacks, little bit of a profit taking. You know, one little candle maybe that pulls back. That doesn't mean that this chart is now no good. But I see an awful lot of people that do that. Or what if the chart actually pulled back to right here? That line should have been a little straighter, but what if it pulled back to here? It's below that line right there. It's no good now. Nope, I disagree. This chart just may be setting up for the biggest gains you've ever seen. I would like to show you that. I would like the opportunity anyway. Okay, let's talk about some indicators here. Maybe I'm going to beat them up slightly. I'll try not to do that very much. I used to be a huge stochastics user, and I've been broke because of it, because I was focusing too much on the indicator and not as much on price action. I used candlesticks and I used stochastics, and they don't work. They don't work unless you have all the other ingredients. So for those that it is working for, it means you have other ingredients. You're not just using those two things. You're not using just a simple bullish engulf or a bull kicker with stochastics. You're using other things. You may not realize it, but you are. As far as everything else goes in here, as far as I'm concerned, and stochastics too, these are all lagging indicators, and there's no reason to have any one of them on your chart when you're swing trading. I'm going to say that again, and I want you to remember one word, two words, the swing trading part. There's not an indicator on here that's needed on your chart to be a successful swing trader, providing you are truly swing trading. Not one, not even volume. Volume is probably the king behind price action, but it is a big, big distance. I hear all the time from people, well, a chart may be moving up. It may moving up. You know what? Let me draw a candle here. It's moving up 1 day, 2 days, 3 days, and maybe volume is declining, and everybody freaks out. Why are you freaking out? Well, you can't be going up because volume is going down. That's a divergence. I read that on page 82 of the book I just spent 20 bucks for. Wait a minute here. You're a swing trader, right? Does it matter that it's going down? Are you marrying this stock? What if I told you from here to up here was 10%? What if I told you that if it went up, you know, from here to here, 30%? What's that got to do with you making 15% or 20%? Like I said, you're not marrying the stock. You know it's going to pull back someday, but just because volume may be declining is not a reason not to trade this stock. As long as you understand support and resistance, as long as you understand price action, as long as you understand what candlestick signals mean. You know, for instance, if you see this candlestick right here, what does it mean? Dark cloud cover. You know, I can almost guarantee, well, no, I can guarantee you in the trading room, I would say, if we close like that on any chart, I would say, I can just about guarantee you that you're going to see a lower low tomorrow. But in no way, shape, or form does that tell you this chart is going to roll over and die. There has never been a chart in history, not ever in history, that you have something like this down here at the bottom, and the chart went up. Let's see here. Let's get an arrow in there. A chart went up like, whoops, wrong color. Let's get green. A chart went up like that. Never in history did this chart go up because of that little old bullish engulf. Not ever in history, although that's what a lot of people teach. And you know what? They spent the last 3 months for looking for that one chart that had a true bullish engulf that went up. And by the way, it was the chart they found 15 years ago, and they're still showing that chart. I would like to teach you about this. Okay, where am I? Gotta be time-wise, doing okay on time. Maybe I'm not. SGY, I better hurry up. SGY was a recent trade. In fact, we sold the last piece of it just day before yesterday, or yesterday, I can't remember now, for 55%. 55%. SGY is a trade that went from about this area right here, or it has potential, that's what I'm looking at, potential from here up to here of about 80%. And what we want to do is we want to trade in that 80%. I'm not suggesting you're going to make that 80%. That's not our job. Our job is to make a decent income. And I think double digits is reasonable. We had a $5.27 entry. I exited half at $7.64 for 44% on the first half of the position, December 1. Either yesterday or the day before, I can't remember now. We closed out the position for 55% on the second half. This chart is a 3-day chart. This is something we look at a lot. 2-day charts and 3-day charts. Again, I would like to share that with you tonight. SWEI. This is a chart that was a trade idea from Hit and Run Candlesticks. When I clipped this chart just the other day, up 300%. This is one of my favorite chart patterns, the rounded bottom breakout, but one of the keys is look how much distance between here and the 200-day simple moving average. Whoops. What's going on here? There we go. All right, let's get back to that GE for a second. This is not a good trade for me, and let me share why. First, let me share you why it's a great looking chart, okay? We have what I think is a terrific bottom. This is not a perfect double bottom, but I'm not going to, I'm not going to look away. That's what I would call a double bottom. Whenever you draw trend lines, here's a little secret. This could be maybe a takeaway for some people. Never draw a thin, tiny line. You want to draw a big fat line. Always when you're drawing support and resistance, a big fat line. In the line makes for a double bottom for me. We have a bullish Hiromi. We rallied up. Great. I see a bullish W pattern. We broke out. Hey, I'm all on board on this stock. This is great looking. We break out through the 200-day simple moving average. We consolidate. We come up to a little bit of resistance, and we have a minor pullback. This is a bullish pullback, and now we have a big old bullish engulf in there. It's a great chart until now. I'm going to come up here. I'm going to mark where my target direction might be, and it would be to fill that gap. It's only 3.5%. Now, there are people that would want this trade for 3.5%. Hey, I get it. GE is a great company. If you want to marry it, that's fine. Get married to it. Go to the just of the piece, get hooked up, do what you got to do. But if you're swing trading it, why would you want to swing trade GE? There's no money in it. 3.5%, really? You should be looking for charts that have 20, 30, 40% potential. I'm not saying that I don't take my 3%. I do. Just because I buy a chart, it might turn ugly 2 days from now, and I might have to sell it for 3%. But I want to always have that potential that it could go up. And if it has all this upside resistance higher, then you're just fighting it. And if the resistance is only 3.35% away, what a crazy way to trade. There's no money in it. If you're going to do it, at least do it for money. All right, I want to wonder why my chart's not changing here. Huh. Oh, I know why. Let's get up to there. Okay. Hey, I want to say thank you, and if I'm not mistaken, I am about out of time here. We didn't make it to the charts behind it. Please write down hitandruncandlesticks.com. On the very top, go to the button up there that says Live Trading Room. You click on that, and then you want to always go to well, for tonight, you want to go to Room 1. Room 1. There will not be a password. You are more than welcome to come in. I'm going to do this presentation, not this particular presentation, but I'm going to talk about every little thing in here, looking at live charts and explaining maybe another way you might look at charts and maybe give you a tool or two to help you with those double-digit gains for some true success.